Now we're talking. Now that was a slingshot off those lows, wasn't it? Well, back to work tonight, guys. Hope you all had a fantastic FOMC day. Hope you survived the Fed. Hope you saved some chips for Reaction Thursday coming tomorrow. It's Wednesday night. We're getting ready for Thursday's trading session. Got some news on the schedule for tomorrow. Got some big moves and some great trades setting up for Thursday's trading session. You know me. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. As always, before we jump in and get this party going, got a lot we're going to cover tonight. I don't want you to miss tomorrow night's video, so make sure you subscribe to our channel. And you know what to do if you enjoyed the video tonight. Hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. Thursday is not going to trade itself. Where's the money to make on Thursday? Well, I'll tell you right now, markets are looking pretty interesting going into Thursday's trading session. Reaction Thursday, as we like to call it in our trade room. As you can see, everything's bullish right now. Nasdaq is bullish. S&P is bullish. We have a lot of different trades setting up here on the S&P and the Nasdaq. Now, you know, I would love to say there's this great big reversal, you know, waiting to dump back down to those lows tomorrow. But I'll tell you, you'll see tonight on these charts tonight, the buyers are making it very difficult for us to find some good shorts here right now. I've got more breakout potentials going higher on the S&P and the Nasdaq. I've got pullback and kind of head fake potentials on the pullbacks there of the Nasdaq and the S&P. So I definitely like some buy side trades, but you know, long-term bear trend. I have two different types of reversal setups I'm watching for on the S&P and the Nasdaq. So I want to make sure you guys know what we're looking for tomorrow to open the door for a reversal, and we'll be ready for both the long side and the short side. Over on the oil tonight, oil is bearish, but I'll tell you right now, there is one really big thing wrong with this chart if you're trying to be a seller on oil right now. Obviously, we've got bears in control after that continuation today, but I'll tell you though, and you'll see tonight in these charts here, it's really difficult, and until we see a couple things come together, it's really difficult to find short trades we're taking right now on crude oil. I really like some reversal potentials here right now on oil going higher. Not to worry, I'm going to cover both sides. We'll cover the sell side setups, right? We have a couple of those in the oil. We also got some nice reversal trades possibly back up to that last week's close here for tomorrow as well. Again, not to worry, I'm going to cover all my favorite trades as you go through each one of these charts here for tomorrow. Now, real quickly, there is some news tomorrow morning. That Philly Fed is tomorrow at 8:30 Eastern time. We get a whole gang of news tomorrow, right? Housing starts, jobless claims, Philly Fed. I wouldn't worry about those too much tomorrow. The whole tomorrow is all going to be about the markets digesting that 75 basis point and that very aggressive commentary from the Fed. We saw a very bullish reaction today. Again, it looks like these markets want to keep going higher for tomorrow, but tomorrow is all about the reaction day to today's FOMC announcement. So there's major news tomorrow, but I wouldn't expect any of those news events to be that big of a deal. It's going to be all about how traders come back into the market here tomorrow morning and trade the reaction, trade their response to the FOMC announcement here this afternoon. Now, let's go over each of the trades here setting up for tomorrow. Whether you trade one of these markets or you trade all of these markets, I'm going to cover all my favorite trades setting up for tomorrow. I'm going to keep things moving throughout the entire video tonight. I'll throw more advanced tactics into it as we go. There'll be different setups, different scenarios. If you're serious about learning how to trade, this would be a great video all the way to the end. And remember, I always try to save the best stuff towards the end to give you guys a reason to stick around and watch the entire thing, right? So stick around, get comfortable, take some notes, and if you get any questions, drop those questions in the comment section. Let's jump in here first, though, to the Nasdaq. Jumping into the NQ. What's most important right now on the Nasdaq? There are really two basic components that are dominating this chart right now. The first one is the bullish trading range. That is the first kind of component on this chart. We had a bull market into a trading range, and it looks like another breakout into another trading range. Now, why is that an important clue? Well, it's an important clue because you'll notice we're coming off the high of that trading range right now. And if you measure the amount above and you measure the amount below, you'll notice it puts us right around some of these key levels of support we've got marked up, 454, 450 area here for tomorrow. Buyers, of course, would love to gobble up that reversal off of that range support below that trading range. Ranges love to rotate back and forth, right? So we're looking to buy low, sell high. That's a really big factor in this. The next one, though, might just be maybe a little bit more important, and that's the spike in channel. This is a very strong spike up. As we always say on these videos, anytime we see a strong move in one direction, we expect a deep pullback and a retest of that high. You'll notice, though, look what the retest did. The retest made a higher high. That's a very big deal because when you see a strong spike, a pullback, and a higher high now we start to think about a channel. And that channel off the high brings down to that low. I can also draw some kind of extensions down around this low. Why is this an important clue? Well, it's important because buyers are looking to buy off the low of that channel, right? Go back up to retest the high of that channel. Maybe go back to that last week's closing price because, as you guys probably have heard me say many, many times, once we start getting into Thursday and Friday, those prior week closes, they become really sticky magnets for us, psychological targets for traders here. So buyers would love to buy off the low of this channel. And then obviously, too, you can see where it lines up so perfectly here now with that range level that we talked about before. Now, I mentioned earlier that as much as I would love to look at this and say, okay, here's that deep pullback, and now we're going to dump this thing back down to those lows here, we're not quite there. We're not quite there just yet because, as you can see, as the market goes lower, it's going to be a bit difficult to get short down here with that range above us, channels here. I'll tell you, there definitely are some short setups we can look for. For example, I definitely don't hate the double top reversal off of that high. I think that is one of the best possible shorts for tomorrow. If we do go lower, though, we've really got to get some pop. We've really got to get some strength going lower here. Because as of right now, the buyers are doing a very good job at making this look like they want to take this price higher here for tomorrow. I think one of the most important things right now on the Nasdaq and the S&P, pretty much everything I say tonight on the Nasdaq can be applied to the E-mini here right now. I think one of the most important things is we have to trade the chart in front of us right now and not let all the news media, not let all the hoopla out there distract us. We spend a lot of time every day in our trade room talking about trade the darn chart in front of you, turn off the television, get out of the news, get out of the chat rooms. Everybody wants to beat this bear drum. And again, we are still very much long-term bearish, but right now these charts are not giving us many options here for the short side. So let's talk about how we make some money on this, both the long side and the short side. I think one of the best possible setups we could ask for right now is a deeper pullback off of this high. Remember, we have this trading range, and the amount we go above that range can be projected down below that range. We've also got that channel which can be projected down here as well. You'll see a couple more of those here tonight. So I'd like to be a buyer going lower on this, but what's the problem going to be? That's a really, really deep pullback. And so with a deep pullback like that, what you need to do is kind of trap in some of the bears on this. What I'd love to do is get that pullback here right now. See if I can get some traders here who are not trading the chart and are trading their emotions, right? Trading the news headlines. See if I can get them to get sucked into the shorts down here. Now, if I can get bears to try a couple times down here, now think about this. All of their stops are going to be sitting right above that high. There's a range above us, still a very bull market at that point. And so I like the idea of that. I call these two try failures, we're basically using stop losses to fuel that move going higher here. Now, once we see our signal candle, and you'll learn more about this stuff in the video class on the website. Once we get the signal candle, we'll buy that setup. And then remember, as the market now starts to go higher now, this is kind of where the good stuff happens now, because now there's a big bullseye right back up to retest those highs. And so now what I can do is I can look left, I can find a channel off those highs, bring it down off that low, and then repeat after me. The first test is the best test. One of my favorite kind of follow-up trades on this is that test, that first test of that new channel coming over. And one of my favorite entry tactics is a trap setup as we go. I really, really like that setup, pulling back off the lows of this channel, and then getting those bears roped in, and then using that trap setup, right, for the entry going higher here. Now, as we go lower, at what point would I start to sell this market? What do you think? If it does go lower, is there some sort of giveaway that would really tell us, okay, this thing is turned over? Because again, remember, there's a very good chance tomorrow morning comes in, people come back to their desks after being away this afternoon, getting out of the way for FOMC. There's a very good chance that the market may come in tomorrow and react bearishly. If we see the pop and grind channel is the one that I'm really looking for here tomorrow. For example, if we pop down here now, and now we start to see this market begin to separate off the moving average and start to grind down, those types of moves are very, very telling that, when a market grinds down like this, what it usually means is the other side of the market, in this case the buyers, has simply given up, right? They've walked away. When that happens now we can get aggressive. We can draw a trend line off of that low. What I'll do is I'll go up and start looking at prior swings up here, and I'll start finding those bigger channels, right? Literally bigger channels coming off that high. Then one step further, find those prior swings. And the goal is to get above one of those prior swings as we pull back to the high of that channel. What I do is I look to get above those prior swings, get some trap setups, wait for the buyers to come in and try to buy off that moving average, get some failure setups, right? Trapping in those buyers and moving average. That oftentimes turns into pullback setups as we go. Now, where's the target down here? Where do you think the target wants to go down here? It's really easy. Take the first leg of that pop, that strong spike leg going down, and then project that over here, and that's going to give you a good exit target for you as the market begins to roll over. All right, guys? So again, that pop and grind, and then a trap, a failure, right? A pullback combination. Now listen, I know that most of you guys and gals have taken the free trading class on the website. You've learned all the setups, you know the rules, you know when to take them, when to skip them. I get so many great emails and comments every week right now, people who are using that free course to make money on their own, not even a member of our trade room yet. It's really inspiring, so keep them coming. But listen, if you're here for the first time today, if you haven't taken the free class and learned all these entry setups I'm talking about tonight, what I'll do is I'll put a little link up here for you in the upper right-hand corner. Grab that link, take the free trading course on the website, learn the roadmap. That way you'll know all the entry setups and where to apply them. If you're like me and you hate missing the best trades each day, or you're tired of taking so many losses, or maybe you're trying to transition from part-time trading into full-time trading, I'll tell you, that roadmap I teach in that free trading class, that'll get you right on the right track really quickly here. So watch on that pullback, right? Watch on that pullback. Now, I got a couple more breakdowns I want to cover here tonight. I got a couple more on the S&P, all right? I got a few more we're going to cover here, but that's a couple to consider here on the Nasdaq. Now, as we go higher, how would I trade this as we go higher here on the NQ? And again, remember, everything I talk about tonight can pretty much be applied here to the S&P as well. So what's the problem we have right now? The problem we have right now is as the market tries to go higher, we have a range below us. Whenever there's a range on the chart, that takes precedence. That is the most important factor on this. Now, again, we do have a channel. It's a spiking channel. So the market's going to want to rotate back up and retest the high. But here's the thing. You can almost guarantee there'll be some bears waiting above these prior swings, right? You can almost guarantee there are going to be some bears up here trying to short this thing and trap us in, right? So we're going to play that game right against them. That's my strategy here. If we don't get that deeper pullback, wait for the price to pull back now. Bears once, bears twice. And the key here is you want to get some sort of trap entry on that pullback. Now, it's a little bit tough to see, but if you look back over here, you'll notice how they pull back and then see how they try once, they try twice, and see how all the money comes in right at that low. Okay, that's the same basic setup we're looking for right here. These are the types of breakout, kind of breakout pullbacks I use whenever there's a range below me and I'm worried about that range acting as a magnet. Now, this little two-try trap, the trap setup I'm talking about right here, this may be a little more dramatic, right? It may go up like this, right? It may be a little more dramatic here, but that's the idea. The idea is as we go higher, where does the market want to go? The market wants to retest this high. Ultimately, it probably wants to get up to that last week's close, right? Because again, we're going to the end of the week, Thursday and Friday, tomorrow and the following day. So I like that. I like that trade going back up to retest the high. Now, can I try to break out? Right? Are there any breakouts? How do I sell off the high here? Right? Can I short off that high right now? We definitely have potential for some breakouts going higher, and we also have potential for some reversals going lower here. Why don't we talk more about that on the S&P? Right? So now we kind of know the basic idea here of this, and keep in mind, everything I talk about tonight on the S&P can pretty much be applied here to the Nasdaq as well. Now, real quickly, the S&P is very similar here to the Nasdaq, right? It's basically a bull market into a range, a bull market into a trading range. That trading range can use the amount above, the amount below, and that puts us in a pretty good area of support down there. We can expect buyers to be looking for the long side. At the same time here, we also, of course, have that channel. You can see that channel we have, right? That pop up. Again, we see a very strong move higher here. Anytime we see a strong move, we expect a retest. And again, it goes higher, right? Higher high. That higher high means there are probably buyers waiting right below that low. Right, that higher high is it's a really big clue, right? So we know there are buyers waiting down below that low here. At this point now, we've already talked about if the market pulls back, right, 1, 2, and then failure into pullback combo, right? We've talked about that already on the Nasdaq, right? Now, keep in mind this same entry pattern, right? That two-try failure, along with that first test channel trap, right? That can also apply a little bit lower too. So just be aware of that, all right? If it does keep going lower, I can do it here. I can do it here. Again, we also talked about how that pop and grind would be a very different story, right? Mark up that low, mark up that high, and then short that high. So keep that obviously on your radar. Now, where we left off, we talked about the trap, right? We talked about that trap here going back to that high. Now, how do I sell that high now? Again, very similar to the Nasdaq, right? How do I sell off this high at this point? Well, at this point now, we've now reached the objective. We've now retested that high. Now we can start looking for that same two-try failure into that first channel. One of my favorite reversal patterns is going to be when I go back and retest that high. Now keep in mind, this move here, it's not really a strong move. Right? It's not like this one right here, right? That's a really strong move. You expect it to be retested. Same thing in the Nasdaq. So when we go back to retest the high, we still have these ranges below us. Yeah, we're definitely bullish, so we have to respect those buyers, but that's exactly why we'll let those buyers try once off the high, try twice off the high. Now, notice how I draw this, guys. I want to see lower lows in price. That lower low is the key because buyers want to buy low, right? That's the key to kind of trapping in more and more buyers and using their stops as fuel. Once those buyers try a couple times, we take out that high. Mission accomplished. Buyers come in, they try a couple times now. We know where their stops are. Again, we have that range magnet waiting down below us, and now we can use those stops as fuel. We can find that push going lower. Let me draw a little better here, right? Buyers once, buyers twice, stops are right below that low. We wait for that nice juicy signal, and then we look for that short going lower. Once the market now begins to go short, right? Once the momentum turns now for those bears, we now find that new channel. We mark off that low first. Remember, we always draw channels backwards in our trade room. You'll learn a lot more about that in that free trading course that I mentioned up in the upper right-hand corner, right? Draw the channels basically backwards off the lows, and then look left, find those prior swings, and we're looking for traps. We're looking for failures. Again, pretty much any of the entry setups you're going to learn in that free trading class that I mentioned before. Where would the market want to go at that point? If we can grab that 2-try failure into first test, channel short, where does the market want to go? Well, remember, the amount we go above the range is oftentimes the amount we go below the range. So that puts us down, for right now, kind of a guess, a good educated guess, around 37.40. Now, this may be a little bit higher, maybe a little bit lower. So, be realistic on this. But that's where the market wants to go at that time. That's a great short off the high. But what if we punch? What if we retest the high and this thing keeps on going? I'll tell you, I could really see that being a definite potential here for tomorrow. A lot of which, just because I know how common it is for these prior week closes to get hit as we go into the end of the week. I also know that both on the S&P and the Nasdaq, we still have that gap wide open. Now, real quick, I am not somebody who says every gap has to be filled, so therefore I'm always buying. No. We don't put too much emphasis on open gaps until it's time for it, right? We're not buying way down here because, oh no, look, there's a gap up there. That's not the reason. The gap is not the most important thing. But you can see, though, again, with buyers having control of this momentum here now in the medium term, again, long term still a bear market, obviously. With buyers in control of momentum right now, though, it's very easy to think that there may be a short squeeze that comes right into this area right here. Remember, a lot of us were asleep at that time when the market opened up on Sunday evening and made that big gap down. That means there could easily be, if these bears, if they can't hold this thing back, this could easily just zip and just really kind of a squeeze, right? Slingshot up into that last week's close. That could happen pretty quickly here for tomorrow. And again, everything I'm talking about right now in the S&P can also be applied right to the Nasdaq. I have levels overhead here, right? I get the measured move, last week's close. Last week's close is definitely probably the biggest, most important magnet as we go higher here. But make no mistake, right? That 38.78 half level, that's that prior, that's Sunday night's absolute high. You got to think that, and on the Nasdaq would be a very, very juicy kind of magnet here for us. So how do we trade a breakout? How do we trade a breakout going higher? Boy, there are a lot of different types of breakout patterns that we can use. One of the simplest breakout patterns to use is a 1-2-3 breakout. So as we go higher here, let's say we take out that high. Now the buyers come in and they don't fail and back down, right? Now they come in, they hold that pullback, and they jump, right? They jump off the moving average. Not just a higher high, right? Like this one. You know what I mean? It's going to really push through that high. If they come in and really jump off that moving average, this is where now we start to get to work, find a new channel off that high or a new trend line, mark that trend line down off that low, and again, look left, find some prior swings, get underneath the moving average. That's always the trick. Okay, one thing you'll see a lot of in that free trading course and in our trade room every day is I purposely try to draw channels so that when the pullback happens, I'm just underneath the moving average. Because when you get underneath the moving average, you're able to trap in those bears who are trying to sell this thing with some lower lows and lower highs. It's a very strong bull pop, which means it's going to want to what? It's going to want to retest that high here. Now, where are some targets on this? Again, I mentioned before that last week's closing price up there, but one easy thing to do is the size of the first leg, the size of the third leg, and that'll really give you a really good, accurate area of where that market wants to go. You'll see some of those examples here on the crude oil. That is one breakout pattern I really, really like going higher. I also like that pop and grind. Just let me talk about that pop and grind down here, right? For that channel, for that reversal, okay? I also like the pop and grind here, right? The pop up, the grind going higher. These are one of the easiest to trade because you simply draw a trend line off that high. Again, anchor it off that big low. Find those prior swings. If I can use that prior high, right, as a level of support as well, my goodness, great job there on that one, right? So get that trap, get that failure, get that pullback going higher. I would imagine it's very possible for us to get a 1-2 trap in those bears, a pop up, and start to grind as those sellers get squeezed out from earlier on this week. Mark up that high, mark up that low, right? Get down to the low of that channel, get that trap, get that failure, and punch it up from there. I like that. I like that breakout. I also like this one too. I also like 2-try breakout, and then we'll keep going here to oil, right? 2-try breakout. Now, 2-try breakouts are really simple, okay? Let's say, for example, we get that trap, 1-2 trap, right? Or we go down 1-2, right? We get that moving, it blasts, right? It really blasts running higher. If it really blasts and run higher, now we look for that strong pop up, that shallow pullback, and that higher high in price. The strong move confirms momentum. Momentum is really important for short-term traders who don't want to use big stop losses. The shallow pullback drives the pullback traders crazy, right? None of the fibs pull back far enough, right? There's not a deep enough pullback to get most traders into that market. And the higher high confirms it's not just a V-top, right? It confirms the move. That's where our traps come in right there. And again, this is the same basic pattern setup that we see over here, right? You see right here, strong move, relatively shallow pullback, higher high in price, traps. So again, it's another reason why, again, if you're looking for some magic short right now, at least until we see a retest of that high, or a very strong pop and continuation going lower, it's going to be difficult to find shorts here until something changes, right? I think there's a very good chance here that as we go lower, we may get that pop and grind, right? Get that pop and grind going lower. We may get that short off the high. We may retest that low. And then again, with those ranges right above us here, we may easily see this now with a 1, with a 2, rope in all those bears and punch it right into those stops back up again. We can definitely play both sides of this market with that. Again, that kind of breakdown channel. And then, of course, roping in those bears into major areas of support. It's important that we remember that this area is a major low, and it's not just one low. It's like this low, and you know what I mean? Don't get me wrong. Again, we're all very bearish here overall, but again, if you can find a real easy way to get short right now, definitely let me know in the comments section. I'd love to know what you're thinking there as we go. So I like the long side here right now. I'm open to the short side, but again, we've got to get some pretty specific setups here right now, unless something really dramatic shakes this thing up and runs it lower here, which again could easily happen, right? Tomorrow's reaction Thursday. So over to our last chart tonight, over on the crude oil. There are 3 basic components here on the oil. And by the way, if you're still watching this video right now, we're almost a half an hour into this video. I just want to give you kudos. I want to give you some encouragement. If you're still watching this video right now, I'll tell you, you are the person I do these videos for. It is so nice to have somebody dedicated to doing this the right way. So definitely congratulations, well done. Keep up the hard work. And I'll tell you, if you're this dedicated to watching this far into the video right now, you got to find some way to get into my trade room. Come join us in the trade room. Come trade along, because if you're this serious about this video, I can imagine how serious you'll take our membership, and you're going to love it. If you put half the effort into trading with us in the trade room, you'll do really well with us in our trade room. So definitely get into our trade room as a brand new student. We open up at 8 o'clock Eastern time every morning. Okay, off my soapbox now. So very, very well done if you're still watching right now. Keys to success. First of all, rollover. We do have what looks like rollover tomorrow. It's tough to tell right now. Right now, you'll notice we're on the 0722 contract. Tomorrow might be a day where we have balanced volume. Oil is one of the only markets that does this for rollover, where, sometimes you'll see pretty much equal volume on the 07 and the 08. Just be aware, once the 0822 contract has more total volume than the 0722 contract, that is our sign tomorrow or possibly Friday that it's time for rollover. Now, just so you know, most of the time, oil rolls over on the 18th of the month. Okay, right now, this is the 15th of the month. So we are technically a little bit early for rollover, but you will see, most likely we'll get rollover here. If not tomorrow, it'll be on Friday. So keep your eyes on that, on the rollover to the 822 contract. Now, what's the most important clues in the chart though, right? First of all, strong move down. That's a really strong move down. What does a strong move down tell us? A strong move down tells us that we should expect a retest of that low. Anytime we see a strong move in one direction, we know the odds are pretty good. They're gonna back down to retest right that low. Okay, that's one very important clue here. Strong move, we have to respect the sellers and expect them to retest that low. Now, once they retest that low, at this point now, I can look for a reversal coming off of that low, which I love for tomorrow, by the way. I can look for a breakout going lower, and that puts us down around that 111, basically 110. Right? We went to 115 here today. Oil loves to make $5 moves. So if we keep going lower tomorrow from 115, 110, right? Seems to be a very logical next objective for the oil. So the bears definitely have control of this with that strong move lower. But that's about all they have right now, right? Because the next clue is the trading range. There's a range right above us. And so this range is very interesting because in my world, when we have a trading range and we see a breakout of that trading range, usually it's what we call the edges of that trading range, right, are going to have to hold. And so right now we are literally in a do or die area right now for those sellers. Remember, we had that strong move down yesterday, which is what prompted us to look for that follow-up leg. But you'll notice we really haven't done much more than that. And so this range above us is a magnet, right? It is a magnet. The bears, again, definitely have control of momentum. But I'll tell you right now, if they're not careful here, they're going to end up slipping right above this low and get snapped right back up. And then look where that puts us. If we measure the amount below the range, that puts us, surprise, surprise, right back up to 120, right back up to last week's close. Again, last week's close becomes an issue Thursday and Friday morning trading session. So this range is a big deal, right? It's a really big clue when you compare it to the strong move going lower here. So what do the buyers want to do? The buyers have a lot of options right now. The sellers, not so much. And you'll see why here in a second. The buyers would love to buy that double bottom reversal, right? That's probably one of the best trades we can get here for tomorrow. The buyers could also buy a reversal going higher here, back into that range, back up to that 120, up to that last week's close. I like those a lot. How about the bears right now? And see, here's the issue. The problem is this would be a great place to sell short. The top of this channel would be a great place to sell short if that level wasn't there. And that's the issue here, right? That level is the issue right now. And I'll also say one more thing too. If these bears really wanted this thing, if they were really as strong as that move down suggests, why are they holding right there? Why are they not retesting that low? That's a really big, it's one of those scenarios where what didn't happen is more important than what did happen on this chart. You would think if the market was really that bearish, it would run lower. It would already have retested, right? It would have already retested those lows, and we'd be talking about being a buyer off those lows here. The fact that we held that low and they couldn't see, look at the buyers come in right there. That's a really big clue. Anyways, let's break it down here. How to make our money tomorrow. Where's the easy trades here coming in for tomorrow? As we go lower, I really like that retest of that low. There's a range above us. I really like that 1, that those two try failures into that run back up and grabbing that new channel, right? Stops, once those bears try twice down there, those stops will be sitting right above that high. We will have already completed the objective. We will have already retested that low. So now the only people who are selling down here are the weak hands at that point, right? The smart money is selling up here, right? The strong money is up there. They're selling high, right? I like this idea here of that two try failure. Grab that reversal off that low using stops as fuel. And then, of course, from there now we go over, we mark up that high, we mark up that low, find that channel, we drill down, and we grab that, again, we grab that trap, right, off of that low. And I say trap, it could be a trap, it could be a pullback, it could be a failure, whichever of the entry setups that we get that we talk about in that free video class. Those are some great trades going back up into that trading range. What if we end up pushing through though? What would be some breakout patterns we can use on this? Well, again, same thing we talked about before on the S&P. So for example, if we take out that low and we hold that pullback, again, we'll look for those bears to fail for the long, but if they hold that pullback and they jump, right, going lower, if they start to jump running lower here now that's another strong leg down. Now we've really proven to ourselves now that they've held that breakout pullback from that trading range. We know that 110, 111 area is the next big objective. So we now get ready to sell that first pullback. We mark off that low, we mark off that high, we drill down. Remember, keep in mind, these are all slower time frames on this video. We'll drill down to faster entry time frames tomorrow in our trade room. And we'll try to grab that first test, because after all, the first test is always the best test. Now, where's a good target for that? Again, we mentioned that 111, 110 area, but again, the first leg and the third leg make for a really easy runner target to squeeze a couple more drops of profit out of that move here. I also, of course, as you guys know about me, I love those pop and grinds going lower. Pop and grinds are easy channels to draw. Mark off that low, mark off that high, go out and find those prior swings, get back up to retest the high. If I can get above a prior swing, it's a trap. If I can get above the moving average, it's a failure. And again, we got that looking pretty good there as we go lower. I really like that short off the high of that as well. We may also see, well, actually, what looks more likely is to get that two try trap going higher here. So we've talked about how to make money on the way down with this. How do we do it as we go higher? This is a very simple short squeeze scenario. So this could really get pretty quick here for those buyers. One thing I would definitely watch out for is just simply a 1, 2, 3 move, right? If this thing really pops and runs higher here, I mean, you know now where that channel is. This is the easy one. Mark off that high, mark off that low, and find the entry off of that low. I'm not going to go over all the different entry setups here once again, but, you know, find that trap, find that failure, find that pullback off the moving average, and we know where the market wants to go at that point, right? You got easy targets, 120 and last week's close. Those are pretty easy for us here as we go. I also really like that strong move, that shallow pullback, that higher high in price, and that trap. This is really kind of, this type of setup is really built for these conditions where the assumption is that as it rotates back higher, all those bears who are stuck short, they're going to get all their stops run. The market will start to zip or kind of snap and go higher there. And then, of course, that shallow pullback allows that, right, allows that trap entry going back up to retest those highs. Or again, that pop and that grind, right? Pop and grinds are very common in reversal scenarios because, again, you're squeezing out the other side of the market. These are not buyers buying it at that point, right? They're probably buyers buying that one, but these are sellers running for cover at that point, which causes the market to flutter and run higher. At that point, I can mark up that high, I can mark up that low, I can look for those traps, those failures, right? And those pullbacks on that, what on that first leg is the third leg. That'll give us a good way to kind of measure that or find that final target. But we have a pretty good idea though for where the market wants to go at that point. if you do go higher. I think the one variable here that we haven't quite covered yet would be the trading range down here. So let's say, for example, the market goes sideways down here. Remember, this applies to pretty much all the markets we talked about here tonight. If we have a trading range, what you have to remember now is that trading range becomes the magnet. So if we start going sideways here into a big trading range here, now what we do is we find levels of resistance up overhead. We wait for price to pull back, and we simply use that range as a magnet, and we use our failure setups to basically sell into stop losses. Okay, that's kind of the easiest way to think about it. So if we go a couple hours here overnight and the market starts to really go sideways here, what that basically means is we've now shifted our magnet from the 118 area now down to this 115 area. Okay, we do see ranges stack up like this, and we'll use that trading range to our advantage. Now, one thing you want to keep in mind on this, and I'll kind of remind you what tipped me off last night on that short squeeze, was a situation like this. So you got to watch out for when a bear market is range bound, we go up, go lower, and then begin to squeeze going higher. Okay, remember, this is the clue, the very little clue we talked about last night on the video that basically tipped us off for that big reversal. It was a very small little, some folks might not call it very important, but if you watched last night's video, it was basically the biggest key factor in that reversal as far as I'm concerned. What you can be aware of, though, is that by the time we get over here now, it's a very bull market. Okay, we call these slingshot reversals. So again, we like the short above the range, but be very, very careful trying to sell it again if it goes down and then slingshots right back up. These are the types of markets that can really rip your head off, right? Or really rip your stops apart, I should say, right? These types of markets where they'll pop up, they'll hold that pullback, right? They'll blast and jump, and that's exactly where that 1, 2, 3 reversal comes in. You can buy off that, right off that channel. This is exactly where a pop and grind will come in. Again, bears are seeing all of that momentum and just pop, 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 right? It kind of pops out all those stops. And at that point now, all that momentum is so strong, you can now look for that first test off the low of that channel. So the one thing I want you to kind of remember is ranges are fantastic, but you have to kind of understand, even a bear market, when it rolls lower and snaps higher, that's a really big potential reversal clue. Obviously, not every slingshot, not every pendulum swing off that low is a reversal, but it really makes it important for us to be careful trying to sell on that. All right, guys? Boy, by now, I think we've covered all the bases on this right now. Now, all we need is a few more hours, right? So we open up in Asia. See how things look going into the U.S. session tomorrow morning. Speaking of tomorrow, don't forget, we've planned our trades tonight. Tomorrow, we're going to trade that plan together. If you're looking for a place to learn and trade along, you're going to love my trade room. I have all the worksheets to follow along, all the tools you'll need all ready to go. I just need you at this point. I'll put all of the membership links, all the free course links to learn the free strategy or the strategy on the free class. I'll put all that stuff right in the description of this YouTube video on the website. There'll be a big button for you under the website, under the video on the website too as well. So grab the free course, learn the strategy, grab the membership classes, grab the trade room class, and I'll see you tomorrow morning at the opening bell. In the meantime, though, don't be afraid to drop questions. If you have any questions in the comment section, you can always use live chat on our website as well. And of course, that toll-free phone number. I'm always here to help out, answer questions if you guys have any questions along the way. All right, guys, great job today. Great week so far. We got Reaction Thursday, big day coming tomorrow. Hopefully, I'll see you tomorrow morning in the trade room as a brand new student. If not, you better come back and see me tomorrow night. We're going to do it all again tomorrow night. Get ready for finally Friday's trading session. Guys, that's it for me now. I'm out of here for now. Rest up. Get some rest tonight. Get a busy day tomorrow. And as always, thanks for tuning in tonight. My name is Joseph. Be well. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye-bye for now.